India is currently undergoing one of its most transformative phases in history. From massive infrastructure development, including highways, logistics, ports, railways, and metros, to advancements in defense and a surge in domestic demand, the economic landscape is evolving rapidly. With rising income levels and the youngest population globally, the stage is set for an economic resurgence. Today, we are going to discuss 3 important railway stocks for investment. If you are new to my channel, please do subscribe. Also check out my playlist, Best Stocks to Buy for the Long Term. As we eagerly await the upcoming budget, the railway industry is buzzing with expectations. The hope is for a significant budgetary allocation for the railway sector, emphasizing decongestion measures, strategic planning, and fostering indigenous manufacturing. The vision is to contribute to a resilient and self-reliant Bharat, building on the foundation laid in previous budgets. The railway stocks have been on an uptrend for quite some time, delivering multi-bagger returns and capturing the attention of investors. But here is the intriguing part. They still seem to possess untapped upside potential. Reports suggest that the diversification of business and a focus on the infrastructure sector in the upcoming budget are key drivers behind the recent rally in railway stocks. The Government of India has announced a fresh infusion of around 7 lakh crore for the development of rail infrastructure, setting the stage for a robust performance by railway BSU companies. The combination of factors driving this rally includes the government's commitment to investment, expectations of continued focus on the infrastructure sector, and the diversification efforts by railway PSUs. But, as with any investment, it's crucial to consider the broader economic and political landscape. With the Lok Sabha elections fast approaching in 2024, PSU companies are expected to remain sideways post the union budget announcement. Also check out our video Best Railway Stocks to Invest in 2024. So let's get started. The first company plays a crucial role in supporting one of the largest rail networks in the world. This stock is a mini Ratna 1 and schedule a public sector enterprise under the Ministry of Railways, Government of India. I am talking about the Indian Railway Finance Corporation. The surge in railway stocks, including IRFC, is attributed to expectations of a record-high budget allocation for the sector. Incorporated in the year 1986, IRFC serves as the financial backbone for the Indian Railways. It is registered with the Reserve Bank of India as ANBFC and is classified under the category of an infrastructure finance company. Indian Railway Finance Corp borrows funds from the financial markets to finance the acquisition creation of assets, which are then leased out to the Indian Railways or any entity under the Ministry of Railways. The range of services offered by IRFC is extensive, from financing the acquisition of rolling stock assets to leasing railway infrastructure assets and lending to various entities under the Ministry of Railways. Over the last 3 decades, it has played a significant role in supporting the capacity enhancement of the Indian Railways by financing a proportion of its annual plan outlay. IRFC follows a leasing model with a typical lease period of 30 years. This comprises a primary lease period of 15 years followed by a secondary period of 15 years. At the end of the lease, assets are usually sold to the Ministry of Railways for a nominal price. Its primary business includes financing rolling stock assets, leasing railway infrastructure assets, and contributing to national projects of the Government of India. Additionally, IRFC is actively involved in lending to companies in the railway sector. Their clientele includes entities like Rail Vikas Nigam Ltd and Ercon International Limited. The extensive reach of IRFC is evident in the broad spectrum of services they provide within the Ministry of Railways. IRFC maintains a strong linkage with the Government of India. The government appoints the board of directors and is actively involved in strategic decisions, borrowing, and operational targets. All financial risks are passed on to the Ministry of Railways. In the fiscal year 2021, IRFC raised funds amounting to $3 billion through various channels, including a syndicated foreign currency-denominated USD loan. Their strategic funding plan aims to minimize borrowing costs. IRFC's loan book is highly concentrated, with nearly half allocated to the Ministry of Railways or related entities. The cumulative funding to the railway sector has crossed the impressive mark of approximately 5,04,000 crores. Their borrowing portfolio in fiscal year 22 includes taxable bonds, external commercial borrowings, rupee term loans, and 54 EC bonds, showcasing their diversified approach to financing. Breaking down their revenue, IRFC derives income from various sources, with a significant portion coming from interest on loans, interest income, rolling stock, and project assets. IRFC's exemption from RBI's asset classification norms and exposure norms contributes to its impeccable asset quality. With no history of non-performing assets and tax liability, IRFC has maintained a robust financial position. A recent milestone for IRFC was the signing of a Memorandum of Understanding with India Infrastructure Finance Company Ltd in October 2022. This collaboration aims to leverage financing opportunities for viable infrastructure projects. IRFC, with a market capitalization of 1,94,786 crores, operates with a current stock price of 146 rupees. Price to earning ratio is 32.12, higher than its sector pay ratio of 25.41. Stock price rose 342.51% and outperformed its sector by 301.33% in the past year. Debt to equity ratio of 8.52 is higher than 1. Return on equity for the last financial year was 13.93%. Annual revenue rose 17.89% in the last year to Rs 23,932.63 crores. Its sector's average revenue growth for the last fiscal year was 12.92%. Annual net profit rose 4.06% in the last year to Rs 6,337.01 crores. Its sector's average net profit growth for the last fiscal year was 66.72%. The company is giving better long-term returns than the industry. IRFC is bullish but also overbought on daily chart. The second stock is a key player in India's railway development. This stock, established in 2003 by the Government of India, has played a pivotal role in revolutionizing rail infrastructure. It was incorporated to meet the country's surging infrastructural requirements and to implement projects on a fast-track basis. I am talking about Rail Vikas Nigam Limited. RVNL works as the construction arm of the Ministry of Railways for project implementation and transportation infrastructure development. The organization undertakes project execution from concept to commissioning and creates project-specific SPVs. RVNL's mandate includes the mobilization of extra-budgetary resources through a mix of equity and debts via these SPVs. RVNL is involved in a wide range of projects, from laying new railway lines to doubling existing routes, converting gauge lines, electrifying rail networks, setting up metropolitan transport projects, constructing workshops, and more. RVNL's revenue distribution included 86% from non-metro projects, 7% from metro projects, 5% from special purpose vehicles, and 2% from other sources. RVNL boasts an impressive order book of approximately 52,000 crores, showcasing the company's robust project pipeline. With a total of 195 projects assigned so far, RVNL has completed 120, has 72 under implementation, and 3 awaiting sanction. RVNL has secured contracts and orders from various entities, including Tata Steel, NHAI, GMRCL, and even international orders from countries like Kyrgyzstan. RVNL operates 4 special purpose vehicles and has a subsidiary, High Speed Rail Corporation of India Ltd, focused on high-speed corridors. Established as a 100% owned PSU of the Ministry of Railways, RVNL acts as an extended arm of the Ministry of Railways. Its mandate includes mobilizing resources for rail infrastructure projects and working on a turnkey basis. RVNL's commitment to excellence is reflected in the numerous awards it has received over the years, recognizing achievements in infrastructure, CSR, sustainability, and corporate governance. As of September 30, 2023, RVNL has a strong order book of over 70,000 crores, focusing on railway, metro, and overseas projects. Recently, the company has formed a joint venture with Jackson Green Private Limited to explore opportunities in solar power projects in India and abroad. The joint venture will focus toward green clean energy projects. RVNL, with a market capitalization of 50,186 crores, operates with a current stock price of 243. Price to earning ratio is 34.35, lower than its sector pay ratio of 41.49. Stock price rose 211.71% and outperformed its sector by 151.57% in the past year. Debt to equity ratio of 0.87 is less than 1 and healthy. Return on equity for the last financial year was 19.39%. Annual revenue rose 5.43% in the last year to Rs 21,278.04 crores. Its sector's average revenue growth for the last fiscal year was 19.57%. Annual net profit rose 20.11% in the last year to rupees 1,420.55 crores. Its sector's average net profit growth for the last fiscal year was 63%. The company is giving better long-term returns than the industry. Investors should keep an eye on this railway stock. Let's have a look at the third stock. Established in 1999, this stock has played a pivotal role in revolutionizing railway services in India. I am talking about Indian Railway Catering Tourism Corporation Limited. As a mini Ratna, Category 1, Central Public Sector Enterprise, it holds the exclusive authorization from the Indian government to provide online railway tickets, catering services, and packaged drinking water at railway stations and trains across the country. The Indian Railways will run more than 200 Astha special trains to Ayodhya after the Ram Temple consecration ceremony on January 22. There will only be operational stoppages on this train, which will run from various cities and Tier 1 and Tier 2 towns across India to the Ayodhya Dham station and back for 100 days after the Ram Temple is open for devotees. After the Grand Ram Mandir Pran Pratishtha ceremony on January 22, around 50,000 to 55,000 people will come to Ayodhya via train daily, as per authorities. At present, these trains will run from Delhi, Gujarat, Madhya Pradesh, Maharashtra, Goa, Telangana, and Jammu and Kashmir. The booking in these trains can only be done via the Indian Railway and Tourism Corporation website and app. Charges like reservation, super fast charges, catering charges, service charge, and GST will apply. Only vegetarian food will be provided by the IRCTC on board these trains. Now, let's take a closer look at the key business divisions of IRCTC, which showcase the breadth of services they offer: catering and hospitality, internet ticketing, packaged drinking water, state tirtha, and tourism. IRCTC manages catering and hospitality services not only on trains and at railway stations but also extends its reach to other important locations. The company promotes domestic travel and international tourism through budget hotels, special tour packages, and efficient e-ticketing services. With 8.03 crore plus users, IRCTC operates 15 rail near plants and 11 base kitchens. Currently, the company is setting up 5 more rail near plants in various locations across India. IRCTC produces packaged drinking water with 15 manufacturing plants and 5 under construction, totaling 19.86 crore units. In internet ticketing, the company stands as the sole authority for online ticket bookings for Indian Railways. With an average of 11.44 lakh tickets per day, IRCTC booked a whopping 4,174.49 lakh tickets in fiscal year 22. Under its tourism vertical, IRCTC offers diverse packages, including air packages, city tours, and luxury train experiences. The company also operates special tours like the Sri Ramayan Yatra and Buddhist Circuit Special Tourist Train. IRCTC's revenue breakup is as follows: internet ticketing 54%, catering 27%, railway 9%, tourism 8%, state tirth 2%. The growth factors contributing to its success include increased railway investments, the introduction of 400 plus Vande Bharat trains, and the booming prospects in tourism and travel sectors. Now, let's talk about some exciting developments on the horizon for IRCTC. The company is planning to build 3 budget hotels in Lucknow, Khajuraho, and Kevadia. IRCTC is entering the e-marketplace with services like bill payments, recharges, and third-party services in collaboration with brands like Amazon, Flipkart, HDFC Life, etc. Diversification into fintech through their online payment gateway, iPay. Plans to enter segments like helicopter travel and medical tourism. Expanding non-rail-based tourism, including corporate travel business, cruises, river packages, and air tickets. IRCTC, with a market capitalization of 75,984 crores, operates with a current stock price of 934 rupees. Price-to-earning ratio is 71.57, lower than its sector pay ratio of 71.62. Stock price rose 46.04% and outperformed its sector by 5.98% in the past year. Debt-to-equity ratio is 0 as the company is debt-free. Return on equity for the last financial year was 40.58%. The company is generating increasing cash from operations. Remember, always conduct thorough research before making investment decisions. I hope you found this video informative and subscribe to our channel for more informative videos.